JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 14th of July. Tuesday. Today's Tuesday, welcome everyone to this Tuesday's morning live session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Quick update on what's happening here globally. So the figure unfortunately continues to rise. So the daily cases are somewhat okay, I would say, because we did have these spikes last week. We did have a record high last week, but yeah, the number is still kind of holding in there, I would say, if we are of course looking at this trend, yeah, hopefully this uptrend hopefully this uptrend will be broken soon. So yeah, let's hope for that, but let's see how the market is reacting now. So the first one I want to touch on here is actually Nikkei 225. So the index closed in the red today already. So as you can see, so yesterday I talked about this one, and basically I was more bullish than bearish on this one, and I'm still kind of overall, I'm still looking at looking at all this positively, because we're still above this upside support line taken from the low the 15th of June. So yes, we didn't get a continuation move higher yesterday. The Nikkei and other Asian indices kind of followed suit of a US activity, yesterday's activity, when initially the US markets opened with a nice positive gap to the upside, however then started losing their gains very quickly, and well, some reports say that this is due to the California maintaining its lockdown. There was a surge in cases in California, and yep, so and maybe actually some profit taking was done there as well. So again, for now, basically looking at this technical picture on Nikkei, there is still a possibility for this one to move higher. What we're going to do here right now is, previously I looked at this 22,734 territory, but now I'm going to take a look. I'm going to keep an eye on this yesterday's high near the 22,785 zone, so roughly around here. A nice good pop above it could in a way open the door towards higher levels. So so for now, basically we are going to remain cautiously bullish, I would say. In a way, don't get me wrong, we could see this one drifting a little bit lower. However, as you can see by the arrow drawn here, the downside scenario for me could come in here after the after a drop below the 21,530 territory, which marks the low of the 15th of June, and this at the same time the price would be placed below all of its EMAs, including this 200-day EMA and the 100-day EMA, shown as the black and green lines respectively. So that's why guys, for now, excuse me, for now, even if we do see a bit of a retracement here, even if this upside line gets broken and we see the rate, the price falling lower here, Still, as you can see, there are a bunch of support levels that could kind of hold the slide, and we could see this one reversing back to the upside. So that's why we're going to be very careful here. Even if we do get a break of this upside line, we're not going to start looking at some lower levels until we see a drop below this 21,530 territory. Now jumping into Shanghai Composite, quick update here. So logically, the index is in the red today. As always, it is also following the yesterday's decline in the U.S. equities. The market is still open here. The Shanghai Composite is still open. So let's see how this is going to end. But to be honest, somehow it looks that that we might end the day like this. And this is what I was talking about previously when I was covering Shanghai Composite. Was saying that in a way, if it struggles, let's say, to overcome this barrier, the high of last week, and near the 3,457 territory, this could reverse back down and drift lower, but it might actually stay here for a while. It could start ranging here a little bit, especially if the price still remains above this 3,336 territory. So that's why for now, guys, be very careful here and keep your eyes on some of these levels. The larger correction to the downside could come on a break of the 3,288 territory, because that's the highest point of 2019. So that's why even if we do see a drop below this 3,336 territory, yes, we could start looking at some lower levels. However, to get a little bit more comfortable with larger declines, we would need to see a drop below this 3,288 territory. Now jumping into DAX, and the German index here also drifted lower. So yesterday it closed in the positive territory, but the cash index drifted lower, especially during the sell-off in the U.S. markets. So yep, we are now looking at we're looking at the cash index right now, we are now trading near the 12,600 level. So basically around 240 points below yesterday, or actually 200 points below yesterday's close. So somewhere around here basically. But as you can see, this is going to be probably working out the same way as it did last week on Monday. So on Monday last week, we also had a push higher, opening gap to the upside. It then found resistance here and drifted back down. This morning, yesterday, we also opened up the week with a gap to the upside, found resistance near this level again, near the 12,842, just below the June high near the 12,913. And yep, then basically now today we're going to be having a nice opening gap here to the downside, and this way confirming a possible island reversal here. So as you can see, last week, for example, we had this island reversal and then the index did drift lower. However, on Friday it kind of pushed back up, because what I was saying as well last week was that as long as it stays above this upside support line, then yes, there is a chance for the index kind of to push back up again. So again, similar stories happening this week. We will get a nice opening gap here to the downside, confirming an island reversal. So let's see if this upside line does provide support. If it does, then yep, this scenario here could work out nicely. For those who are more on the cautious side, you could just wait for a push above the the highest point of June here. Excuse me. And then kind of aim for some higher levels, because such a move would confirm a forthcoming higher high. Now jumping into gold, so gold is tricky because yesterday it did push higher, but as you can see, it kind of quickly and then reversed back down, still remained above the short-term upside support line taken from the low of the 5th of June. Yes, it kind of is now, as you can see, is now flirting with this upside line. There is a possibility we could see this one drifting lower, and yes, if it does drop below the 1790, or sorry, 1789 territory, somewhere around here, then we could consider some lower levels, but we'll be very careful near the 21-day EMA, because as you can see, previously it acted as a good area of support. So we'll see if it does the same trick this time. If the price falls below the 1789 zone, If it does, then if this 21-day EMA does provide decent support, then we could see a nice rebound. But again, let's not over speculate on this too much. First of all, let's see if this upside line gets broken. If it does, then quickly keep your eyes on the 1789 territory, marked by the way, marked by the high of the 1st of July. And then yes, we will, like I said, aim for that 21-day EMA or even lower. But again, let's not get ahead of ourselves too much, and let's keep an eye on this upside line. In terms of the upside, now we will take a bit of a careful approach here and wait for a push above the high of last week near the 1818 level before kind of getting comfortable with some higher extensions to the higher extensions. Now, jumping into oil, not much excitement here, but basically for now everything's kind of working out according to what I was saying previously. So the barrier here, the 41.61 zone, continues to provide resistance. That's by the way, the highest point of June, and we need to see a nice good pop above it in order to aim for some higher levels. At the same time, the price would be placed above the 200-day EMA here and kind of increase the chances of a further move higher. However, what I was also saying, that in a way, even if it does decline a little bit lower, as long as this 21-day EMA continues to provide support, there is still a chance for the bulls to step in. Today, we're seeing that the price is still balancing slightly above this 21-day EMA, so let's continue monitoring it. If it continues to move here, then well, I mean, there is still a chance for the bulls to step in, but as I said, the more comfortable level could come after the break of the 41.61 level, which is the highest point of June. So in terms of the downside, we would prefer to maybe wait for a drop below the 37.10 zone right here, marked by the low of the 25th of June, and then kind of consider some declines, some further declines. But until then, we're going to probably stay a little bit on the neutral side. Litecoin. Litecoin, I talked about this one yesterday, and the crypto drifted lower, and it failed to move above this 45.92 territory. So we're still going to keep an eye on it, because a nice good pop above it would confirm a forthcoming higher high, and the higher levels could be met. But the fact that yesterday it kind of drifted back down, yes, kind of makes us a little bit concerned here about the upside. However, as you can see, the price is still floating around this 21-day EMA. So even though we had an overshoot yesterday, for example, the daily candle remained above this 21-day EMA. Today we're seeing again a violation of this 21-day EMA, shown as the yellow line. But again, it's not really doing much. It's just kind of hanging around here. So that's why the downside scenario for us could come from a break of the 39 level here. As you can see, it acted as a fantastic area of support back here in the beginning of May, and also in the end of June. So that's why a drop below the 39 level would be required in order to aim for some lower levels. Jumping into a few pairs very quickly. So quick update on AUD and ZD. I talked about this pair yesterday, and I was telling you guys to keep a close eye on this idea where the pair could travel a little bit higher, but if it struggles to overcome this short-term downside resistance line taken from the high of the 2nd of June, then yes, another round of selling could be possible. For those who are more on the cautious side, wait for a drop below this 1.0563 territory, marked by the yesterday's low, and also well, one moment, just bear with me one moment. No, wait for a drop below the 1.0556 territory right here. That's the low of yesterday, so just a slight adjustment here. At the same time, if we do see a drop below it, this would place the rate below the 200-day EMA, and more sellers could be joining in here, as this would confirm a forthcoming lower low. Now, in terms of the upside, of course, the break of this downside line is required in order to aim for some higher levels. Now, jumping into NZD USD here very quickly. So here the picture is a little bit difficult for the bulls, as you can see that this barrier right here near the 0.6580 territory kind of continued to provide decent resistance, and although we did have a few overshoots, the pair still is struggling to close a daily candle above this level. Now, today we're seeing a bit of a decline, or should I say yesterday we saw a bit of a decline. Today we're seeing a bit of a continuation move lower. In a way, for now, yes, we could consider some downside. We will initially aim for the 21-day EMA here shown as the yellow line, because we want to see if it actually going to do the same trick as it did here in the end of June, where it provided decent support from where the pair reversed and moved higher then. But if it fails to do so, the last kind of option, for the last resort for the bulls to step in, could be near this upside support line taken from the low of the 19th of March. Jumping into USD CAD, I talked about this one as well yesterday. So basically what I was saying is that we're going to remain neutral until we get a clear move out of this little, I would say, range here where the pair is currently stuck in, and it's currently stuck between the roughly between the 1.3488 zone and the 1.3624 levels. So for now, basically, we will stay a little bit on the neutral side, because if we we need to see a clear break through one of those levels first before we could consider the next directional move. So if we get a nice push above this 1.3624 level, then yes, we will aim for some higher levels. However, don't forget that we are still below this downside line taken from the high of the 31st of March. And in terms of the downside, a drop below the 1.3488 territory, yes, could open the door to some lower levels. However, we will only target the lowest point of June near the 1.3314. GBP JPY, this one is also a little bit difficult. Now here the problem is that in a way the pair seems to be showing willingness to travel higher. It's trading above this short-term upside support line taken from the low of the 18th of May, but at the same time, it is struggling to overcome this this barrier here near the 135.75 level. So in a way, of course, that was the previous level here. I mean, this is roughly a level, but what you could do here is keep your eyes on the high of last week near the 135.92. So maybe a little bit of a better potential breakout level to keep an eye on, because in addition, if we do get a break above this level, we could also see a push above the 200-day EMA, where more sellers could, more buyers could see this as a good opportunity to step in. In terms of the downside, we would wait for a drop below the 131.75 territory before considering some lower levels. I do understand that we could be missing out on a big area here, but we'd rather be on the safe side. Quick update on euro dollar against the Turkish lira, something that I've talked about yesterday in my traders and tea time, and basically here the pair is testing its key resistance right now near the 7.7960 level, or in a way we could round it up towards the 70.80 territory. So let me just try to maybe capture one of those. So again, roughly around here, guys. Like I said, the pair right now is roughly near this 7.80 territory. So a nice good pop above that level could do the trick here for more buyers, and higher levels could be met. I mean, as you can see right now, the pair is forming a kind of a typical kind of possible ascending triangle here. In a way, we can draw it this way here, but the fact stays the fact that we are near this key area of resistance, which, if gets broken, could open the door towards the highest point of March here. Sorry, May, near the 7.8540 territory. And but if that gets broken, of course, this may open the door towards even further larger extensions to the upside. So for now, guys, be very careful with this one. It looks quite interesting, but we need that daily candle close above that 7.80 territory before kind of considering some higher levels. And finally, Euro USD. So this pair is again similar story. This is what I was talking about yesterday, and this is what I was kind of cautioning everybody that keep your eyes on this barrier. Keep your eyes on this 1.1353 zone, because as you can see, once again, we got a nice break above it, but we didn't get a daily close. So we didn't get a daily candle kind of staying above this barrier. And similar story as we had last week. in a way, kind of the pair drifted back down. Now, don't get me wrong, we still have a chance for this happening today. So kind of the pair is showing willingness. The pair is showing willingness to travel higher. Let's see if the bulls manage to help this pair out and push it further north. For now, of course, looking at this picture, we are a little bit more on the bullish side because our oscillators, for example, here on the daily chart are well, the RSI is above 50, and the MACD seems to be willing. It's not there yet, but it seems to be willing to climb above its trigger line. So, but of course, let's see if that happens. If it does, then of course, yes, higher levels could be met. Initially, we will aim for the highest point of June. Near the 1.1422 territory, and then a nice good break above it could open the door towards the highest point of March, or should I say highest point of this year, near the 1.1496 level. So keep your eyes on that one. But again, all eyes are on this barrier here. Yesterday we did get a nice break above it, so let's see if we do get another push above that area. If we do see something like that, then yes, we will aim for some higher levels. And ideally, as I said, keep your eyes on at the end of the day, keep your eyes where the daily candle is going to stay here. If it's going to stay above this level, wonderful. There is a possibility of seeing this one pushing further north. If it doesn't, then, well, maybe not everything is good in the bull block. So something to keep in mind for you guys. So I hope you found it useful, guys, and thank you very much for watching and listening. Keep your eyes on today. By the way, keep your eyes on the economic calendar today. Let me just quickly refresh my memory on what's happening today, because there is some information coming out. So yes, of course. So keep your eyes on UK. We do have the GDP, the final GDP figures coming out. So month on month. Also industrial production, manufacturing production, something that might help move the pound a little bit. And then, yes, of course, later on we do have the inflation figures from the US, final headline inflation figures. So you have the core and the headline. So yeah, keep your eyes on those, guys. Could be quite interesting. So like I said, guys, I hope you found it useful, and thank you very much for watching and listening, and thank you very much for joining in. I really appreciate your time. So if you want to catch my video later on, my trader's tea time is always around 13:15 GMT time. But for now, I hope you have a wonderful trading day, guys, and I'll see you later. Thank you very much, and bye-bye.